you do and what you're all about in the real estate space.
Yeah, man. So I pretty much am known for short-term rentals, hospitality. That's kind of where the content that I put out to the world is the short-term rental stuff. But I've been a real estate investor for about 8 years. I started with doing rental arbitrage, so basically renting out apartments, furnishing them, and then renting them out on Airbnb, furnished, and making a spread and profit. Did really well on that, scaled that business significantly to about 170 units. And then there I took that cash flow and just started actually going into real estate. I've done long-term rentals, mid-term rentals, short-term rentals, multifamily, boutique hotels, development. I mean, pretty much anything, creative finance, anything you can think of in the real estate space. My expertise now is putting deals together. I love putting deals together with good people, partnering with good people, and primarily focused around short-term rentals is still my bread and butter. But I mean, anything real estate, man, excites me. So I'm kind of excited to be on this podcast, actually, because one of the biggest things, and forgive me if this comes off the wrong way, but I know you primarily said you're focused around agents and teaching them to invest. And I love talking to real estate agents that don't have the experience with investors, because it's always a good teaching lesson. So I'm kind of excited to go over some of these things or maybe some tips and tricks that some agents out there could take and apply. Things like pitching creative finance or pitching long escrow, simple little things that a lot of agents out there don't know, to help an investor or for them to move into an investing world away from just selling and acquiring properties for people.
That's definitely another benefit of this podcast, is it can be kind of a bridge. It's like two different worlds. I don't know if it's just wholesale, retail, if that's the way to describe it, but it's definitely two different worlds. And I think that often agents have kind of, I think it can go both ways. I think there can be like kind of bad blood between the two a little bit. Like it might, agents might see investors as wasting their time because they're talking about things like, seller financing. And they're like, if they can't get financing from the bank, why would the seller want to do this? And so I think it's really good to have these conversations and to kind of open people's minds and help people understand. And at the same time, I think it's also, there probably would be some good questions that an agent could ask an investor to see how experienced they are, how, to vet them a little bit as well, to see, because I think there probably are some people that have never done anything, that have listened to 1,000 Bigger Pockets podcasts and may not actually ever take action, but want to talk about it a lot. Tell us a little bit. Let's just get right into that. I mean, tell us a little bit about what you like to teach agents when you come across some that aren't, as investor friendly, haven't been in that space much.
Well, it's a tough, I don't want to say it's a tough question to answer, but it depends specifically on the person that I'm dealing with. Sure. Typically when I work with an agent, primarily it's, hey, they're going to get you under contract to either sell your home or to help you find a home. Right. I go more of a direct approach typically. So I have a handful of agents that I work with that I've kind of, I don't want to say molded, but we've worked together so long to where they understand where I'm coming from with specific details or needs to acquire specific property. But the biggest thing is every property is different. And when you go to acquire a property, the strategy sometimes could be very different than your typical conventional offer, where you're going to offer something close in 30 days, go through an escrow process, right? I'll give you a perfect example right now. So I'm working with the realtor. And I go about it differently because I actually went directly to the seller's agent instead of getting my buyer's agent to reach out to him. And I'm like, hey, dude, listen, I wanted to call you directly because I'm going to go about this a little bit different than what you're probably used to. How familiar are you with dealing with investors? And he's like, oh, I've dealt with a few investors. I said, oh, even better. Perfect. So here's what I want to offer. I'm looking at a property. Actually, this was a piece of land. I'm looking for this specific plot of land. You're the seller agent, and I want to see if we can either do a seller finance on a 12-month note, or we can do a 6-month escrow to be able to close on it in 6 months once I acquire the construction loan. And the guy was like, well, I guess why would you need a 6-month escrow, or why would you need to do a seller finance? I said, well, preferably I'd like to do a 6-month escrow because then I don't have to do 2 closings. Right? Seller finance stuff to close, go into escrow, title fees, all that stuff. But if you do a 6-month escrow, I can put a larger amount of VMD down. Let's just say something like 10% down. And the reason why I would need 6 months escrow is because then I can go through the entire process that I need to make sure that I can build on this lot, right? And then acquire a construction loan. And at the time of the construction loan, I close on the land and I close on the construction loan, as opposed to getting a loan for your land and then having to go and get a second loan. And a lot of these lenders obviously always make a big deal about these things, right? You can't get a loan behind a loan on a piece of land. And so when you explain that stuff, anyway, long story short, I went through this whole process with this guy, and he was still confused, right? So he's like, just write up the offer. So I wrote up the offer, and he sent it in, and they came back with like some crazy, ridiculous counter offer. And so I'm like, hey, dude, listen, I think there might be some sort of misunderstanding as to why I want to do this. Let me re-explain it. So I sat down, we explained it again, and this was a really simple, right? I mean, just 6 month escrow. Like, there's not a lot of intricate. It's not like I'm asking for some crazy seller finance terms. Anyway, long story short, we got the offer accepted because I was able to. The realtor was able to understand where I was coming from, what were the needs that I needed. Then he was able to take that knowledge and explain it to the seller and go, look, this is what they're doing. This is why they're doing it. This is how they're doing it. And this is how they're going to close in the 6 months, right? The biggest fear usually for these type of loans, and I'm talking about this one specifically, or these types of contracts, is they think that we're not going to close in 6 months and we'll back out. So typically what I'll do is I'll do something like a non-refundable EMD after the contingency period, right? So like on a 21-day, look, if you keep it. If we fall out, you keep 20 grand, you're done, right? Anyway, long story short, that's one of the reasons. I don't know if that kind of gives you an understanding of where I'm coming from. Yeah. I mean, a bunch of other ones I can go into.
Well, yeah, no, I think maybe this is a highlight of some of the differences between investing space and retail space. Is often an investor is talking directly with an owner. They're talking directly with the owner, and they are, if they're good, they are looking. They're trying to figure out exactly what is important, what that seller needs in a deal, and then they have their knowledge and apply it of all the different ways the deal could be structured to then be a very good win-win for both parties. And so this is where, like, seller financing can be a really good opportunity for both parties, where if somebody doesn't want to take the capital gains hit right away, and they want to, break that down into the seller payments or the owner, the seller financing payments every year, that's one way that you can really benefit a seller. And if you don't understand that as an agent, I think oftentimes when seller financing comes up, it's people are thinking, well, it's because this person can't actually get financing. So like, why am I going to bother with this person? They can't even go to a bank and buy this property. But again, there's so many different factors. I mean, you can, there's so many different levers you can pull when you understand this stuff. Like you could overpay for the property with the right terms. Like it could, if the interest rate is less, or you could even have a 0% interest rate if you bake it into the purchase price. And if the seller only cares about the purchase price and they want that ego stroke, whatever, of selling it for that much money, even though it's not worth it, that's possible. There's a way to make it work. And so I think that's where, having a really good understanding of the whole picture, it can be missed. In an arm's length transaction where you have two agents representing other sides, and maybe they aren't too busy to really talk to each other well or fully understand their clients' perspectives and what their needs are, or just don't really understand that there's different ways of doing things, and there's standard.
Yeah, I mean, I'll give you another example, and it's funny you say this, but the biggest thing that I run into is typically agents. They just either don't want to deal with something that they're not familiar with, because they think it's either not going to close, they won't get paid their commission, or something along those lines. I called one in Southern California, and I'm like, hey man, I'm calling you directly because I want to explain what I'm going to do. And the guy stops and he starts laughing and he goes, why don't you just have your buyer's agent call me and I can deal with them directly? And I'm like, oh, God, I know where that's going to go, right? It's going to be like an instant, like, so I did, and it's funny. So in my head, I'm like, okay, well, this guy's not going to want to either consider what I'm going to offer, or he doesn't want to deal with it. So we sent in the offer, and sure enough, they're like, why would we even consider showing this to our sellers? And I'm like, well, that's why I tried to get you on the phone to explain the situation, and you said no. And so now my agent's over here trying to explain it to him. My buyer's agent's trying to explain it to them, and Anyway, long story short, we ended up not acquiring that property because it went nowhere. But the biggest thing that I run into is a lot of agents that, again, don't understand the process, or they think that the process is incorrect, or they think that it's not in the best interest of their seller, or they just don't know how they're going to benefit from it, right? So there's a lot of different ways that you can close on a deal, just like you said. I guess you just have to be kind of open to understanding and learning. So even to give you an example, dude, for the short-term rentals, like now specifically, I only work with the realtors that are versed in short-term rentals. And there's a pocket of really good ones out there, because number one, they'll know exactly the best use case for an investor to try to either get like the short-term rental tax loophole that people can get, right? If they go and buy short-term rental as an investor, offset their W-2 income type of situation. And a lot of realtors out there don't know about it.
Yeah.
And so it's like when you talk to a realtor that understands either some sort of tax law, some sort of short-term rental, they understand how to underwrite a property. They know what the possibility of a property in terms of the revenue it'll generate. Dude, those people are great, because it just those realtors are great because it cuts the timeline of acquisitions on a property to like literally this, right? You can go for months looking, and these guys they drop it on your lap and they go, hey, dude, these are the properties I have, and this is what we think it's going to make. And I'm like, oh man, this is great.
Yeah.
And you start a conversation.
Yeah. I think what you just hinted at is probably the biggest opportunity right now in the Airbnb space. And I think we could get into this too. I don't know how many different markets you're in Airbnbs, but we all know that there was a huge flood of interest in Airbnbs over COVID, both in, I would say, people wanting to stay in them. If they weren't traveling as much internationally, et cetera, they might want to go to the local resort close by to them or something instead. And then also just investors buying into them. And so I think a lot of people bought Airbnbs and with analysis numbers, with figures from before this boom happened. And then they realized that they weren't going to be able to get that pretty quickly. And so at this current state, there could be some markets that are hurting pretty bad from this oversaturation of Airbnbs, maybe less stays in general. With all that being said, and I want you to answer that question, I'm sorry for making this such a long-winded question here, but I think there's also that opportunity still for somebody who is a high-income producing or high-income earner, doctor, whatever, that they could use that tax loophole that you talked about and offset their taxable income with an Airbnb. So if you are in a situation where you need to sell an Airbnb, there is that buyer out there still that maybe not need to make as much money on the cash flow, but they have huge incentives from the tax benefits, tax write-offs. So, but yeah.
So there's
bit about.
Yeah, there's multiple things that you brought up there, right? So, dude, I'm in I don't know, like 9 different markets across the US. Some really heavy short-term rentals, some that I've just found that generate good cash flow. And they're all different. So the big ones that got really hurt are the ones that everybody jumped into, right? Like the Smokies. That's like hands down one of the worst that you can jump into. And I don't want to make it sound like I'm talking bad on it. And I know because I'm in that market, right? After the COVID boom, where everybody was just pumping cash out, right, for short-term rentals, a lot of people went in and bought those. Well, now that everything's kind of stabilized, the revenue that people are seeing is down. I mean, like across any market right now is about 18%, 22% now from what I'm seeing. And that's, I mean, dude, I've seen properties even in Mexico, right? Like in some really beach towns that are down about 20%. Well, that's just the way the market is right now. It's a cycle, right? And so the people that got in at that time with the really high interest rates or the really high payments or the really high purchase price, they're either in a spot right now where they have to pump more money into the property to really make it stand out in order to continue getting that revenue, or they're having to offload it at a discount. Now that does 2 things. Number one, if you step up and you put money into the property and you really make yourself stand out, you're going to continue just fine. Number 2, the person that's trying to come into the industry right now, if you do it right in the right market, you can get a very nicely discounted property that will still generate income, knowing that you have to put money into that specific property, right? You're not just going to buy it and expect it to start making money. And so as a matter of fact, for the high income earner that needs some sort of tax write-off that can offset a W-2, We just sold one right now for 1.8 to somebody exactly doing that. Right. And this was a ultra luxury property, ground up development. We actually sold it right before we even completed the construction because they were in the market. And a business partner of mine has a bunch of these high-end luxury properties. And he's like, hey, dude, I just sold one for like a really significant amount. And I'm like, holy cow. And so I'm like, let's just start talking to people and put ours up. Right. And one of my other business partners, a really good friend of mine, he raises capital. He's raised about 30 million or something this year. And so I'm like, hey, dude, I was like, we have these properties. Why don't you come in? And I mean, this is how you raise capital. He raises capital by taking income from really high income earners, doctors, like you said, and they'll invest it into properties where they can offset their W-2 or into other different types of tax strategies. Anyway, long story short, again, I don't want to keep these answers long-winded, but somebody that makes a certain amount of money can go into a specific market and buy something that really stands out. And now I talk about this a lot, but the people that are doing really well in the short-term rental space are the luxury high-end properties that are attracting the type of customers that aren't affected by current market conditions. And the best way to say that is people that just have money that aren't affected and that can spend money, and they're booking, or there's people that are and they're booking high-end properties or paying the high nightly rates, or it's a group of people. So if you're traveling, for example, you travel with 6 of your friends, you go and get, a 6-bedroom home, and you can book something significantly more expensive, but it saves you guys all the money, more money, because you're booking together, right, as a group. And so these big properties and these high-end luxury properties are the ones that are really just not being affected. As a matter of fact, we're seeing an income, and I'm in both markets. I'm in the budget friendly and I'm in the high-end type of property. So again, I'm speaking from experience here. And so in the really high-end properties, we're actually seeing an increase in revenue currently, as opposed to my low ends. I'm in some properties that are beating me up, right? I'm like getting wrecked, again, because I haven't put in amenities, or I don't want to invest more money into them, or they're in a market where I'm just kind of like, okay, eventually this market will turn. But then those other high-end properties are really pumping cash out. So the high net worth individual that has a couple $100,000 that they need to write off in W-2 income can go and buy a property. Now there's a lot of, I don't, not financial advice here, guys, but there's a lot of little details that have to be matched in order to offset that W-2. One of them is, for example, you have to manage it for over 100 hours in 1 year's time, more than everybody else on the in the business, or more than your cleaners. You have to put in more hours, things like that. And we can talk about all that if you want, but those people can go and acquire a really large property, for example, the one we just sold for 1.8, and then they do a cost seg on that type of property, and they're saving, I mean, I did one last year and I saved around $260K in taxes, which is kind of insane. You know what I mean?
Yeah.
So,
and then on top of that, my understanding is that can roll over as well. So like if you're not able to realize all that savings, you can roll it over to the next year. So it's can be a really powerful thing in this market, with 100% depreciation being back. You do have to put the time in. So that's definitely a factor there as well. Do you know if it's a spouse, if it's able to be a spouse as well? Like,
so it actually can be a spouse. So if you're married, your spouse can be the one documenting the management of 100 hours, and you're fine. It's either one or the other. Now, if you're single, it's got to be you. But if you're married, your spouse can totally do it for you. We've noticed that the couples that are married, their spouse is always the one documenting the time. And, like there's certain things you can document too. Not everything's counted towards management.
Yeah, and I think that was one of the reasons that a lot of stereotypes of who realtors were or are is the spouses of a dentist, the spouses of an agent, and this gets into being a real estate professional designation, which is essentially kind of what this loophole is allowing people to get into that space. So like if they are not a real estate professional, they're not a full-time investor, that's not where all their money's coming from. They're not a full-time agent where all their money's coming from that. They have a W-2, they're able to kind of tap into this world that we are in by doing this short-term rental thing. And if you're an agent and you're considering it, not that a short-term rental isn't a good option, it could still be a good option, but you don't need to do a short-term rental. You can just do a regular investment. It can be a long-term lease. It can be a multifamily. You can invest in a syndication. and have basically somebody else do everything for you and reap the benefits of that cost seg that they do. And just to give you an example of what I've done. And I might have gotten lucky, but I invested in a syndication, $50,000 into a syndication. In the first year, I was able to write off $66,000 off my taxable income, which is a great ratio, right?
Yeah, I mean, that's really good.
And then I was able to, on top of that, get I think it was 11% return on my investment just from dividends. So second year was another 16,000. I don't know what the third year is going to be. We'll see. But that's this is another thing that crossing this bridge between investors and agents can help people understand the power of all the opportunities that are out there. It's a huge game changer, and you should be meeting with accountants to verify this information and and all that kind of stuff. But know that it is there, and people aren't just going to tell you about it necessarily. You kind of have to go out and figure this stuff out.
You brought up a bunch of good points. Number one, for everybody listening to this, if they're still listening to this point right now, right, find a CPA that's familiar with real estate laws. That's the biggest one. I've gone through, no joke, 8 CPAs, and I've pitched the same strategy, and every single one has given me something different, right? And so everybody's going to give you advice. All the CPAs will give you advice based on their knowledge, right? So I would suggest talk to multiple experienced in real estate before you go and do any of this. Any tax write-off has to have a basis behind it. What's the basis that you can say, hey, what's the justification of how you got that write-off in order for it to make sense in the eyes of the IRS? Because again, look, none of this matters unless you get audited, right? Which, however, we should all still be doing it correctly, right? I'm not saying go and do it without, don't do it. If there's no basis or justification behind any tax strategy, you need to make sure that it's there before you go and do it. Second part, for the agents, the biggest opportunity, if I was a real estate agent, dude, right now, the biggest opportunity that I would do is I would start learning the benefits of how you can, number one, acquire under contract these large properties that you can offload, but educate yourself on how you can benefit a buyer, or how a buyer can benefit. How the buyer can benefit from you bringing them this property, right? All the agents that I know that are crushing it, most of these guys have pocket listings that never hit the market because they have a buyer's pool and they know what that buyer pool is looking for. And it's either high net worth individuals. And when the time comes when they're like, hey, dude, I have this much money. These agents know the tax laws, and they're like, hey, I'll go find you a property right now for $2 million. That will generate revenue, or at the very least break even, right? So you're not losing money. You're not putting money into this property, but you can write off 300, 200, 100, 500, doesn't matter, K worth of taxable income. Instead of you paying that money to the IRS, you own an asset that's going to appreciate over time. You wrote off all this money, and you as the agent took it to them, right? That's a huge advantage if you understand those things.
Yeah, 100%. I was talking to a former client, friend, etc., who was a physician, and was explaining this to them, and it's just they didn't really understand that fully, and now I have won that business from that person for a long time, because I'm seen more than just like a facilitator, a door opener. I'm like a trusted advisor that can actually bring them a ton of value.
Yep.
It's such I mean, obviously education is important, but for some reason this side of things doesn't always seem like something that people should learn in real estate sales. But tell me a little bit about the arbitrage thing. So if people aren't familiar with that, just kind of break that down a little bit, and why, and your approach when you're talking to the landlords, et cetera, when you're
Sure.
looking at getting that done.
Yeah, when I started wanting to invest in real estate, my idea was that I was just going to go and buy a property in Southern California, put a tenant in it, right? Listening to Bigger Pockets, right? Buy the rental, put a long-term tenant, you'll cash flow above without all the stuff that that's how I started listening to Bigger Pockets. And when I started looking for the property, I quickly realized that Southern California, you're looking at 450, 500K. I'm not going to cash flow with the current rent at that time. I actually would be negative cash flow. So I'm like, well, there goes that, right? my real estate investing journey is over. And so I'm like, okay, I'm going to get into wholesaling, right? It's like the next thing, right? So especially at that time, so I had just left I used to have a collection agency. I had left that. I was like, I'm done with that. I think I had like 20 grand on my name. Used that for my living as I was trying to figure out what the next thing was. Got a W-2 at a casino, ran through all my money, and I was all kind of heartbroken about, hey, I'm not going to actually be able to go buy a property anymore. I didn't even have enough for the down payment to begin with. So I'm doing research, and that's when I kind of found out about Airbnb. Again, listening, educating myself, talking to people. Two guys, I don't even remember where we met or how we talked, but they were like, hey, these guys, they pull up in a Ferrari or something, and they're like, what do you do? And they're like, oh, well, we have a bunch of units or Airbnbs, apartments on Airbnb in a building. And I'm like, what? Like, that's a thing? You could do that? And they're like, well, we're doing it like, if we get caught, we'll just leave the building. And I'm like, well, that's not a very sustainable business model. At the same time, I learned about short-term rentals, and I'm like, wait a second, short-term rentals is just Airbnb. Airbnb is just a marketing platform. So I'm like, how can I make this a legit business? So I'm like, I'm going to start calling apartments and see if I can actually do this myself. Dude, it took me about 6 months of just a bunch of no's, right? Because I don't know how to pitch it. Nor did I know how to say it. Then I found a guy that was teaching business systems, and it was like my first like little mastermind that I joined. And I think it cost me like $600 for like a set of videos at that time. This was back in early 2017, I think late 2016. And I'm like, okay, so I can actually convert this thing into an actual model. I set up an appointment at an apartment complex. And I'm like, hey, listen, my name's Rafa. I'm with Knight and Ring Properties. I run a short-term rental corporate housing company, and I'm looking to expand in your area. The way I work is we go and we lease it from you through my company. We lease it long-term. We get it furnished, and then we provide it for people who come either for business or leisure in this market, and we provide it to them as a short-term. Fully furnished accommodations. We provide everything that they need. Would you guys be open to that in your complex? And she's like, look, man, she's like, we're going through a big rehab right now. Can you pay the rent? And I'm like, yeah, I can pay the rent. She's like, well, why don't you come by and take a look at it? I'm like, sure. So I go into this apartment complex. It was 120 units, I believe, and 60 of them were vacant. They were going through a big overhaul of like remodeling this thing. So I'm like, oh my gosh, I got lucky. I hit the jackpot on that building because number one, they had a need that I was able to solve, which was to lease out apartments ASAP. Number two, they didn't understand the model, so I was able to explain it to them from day one. And three, when they saw how well I did, I mean, they were just throwing apartments at me. They're like, hey, dude, take more. And I'm like, okay, great. So I ended up getting a 2-bedroom apartment. We got it furnished. It cost me, I had no money at that point, dude. I had $5,000 to my name. So I called my brother. I'm like, hey, dude, I was like, I got this great business idea. He's like, I got a credit card. He let me borrow a credit card. Which is funny. I just did a Facebook post about how I've been raising capital from day one. I never even thought about it, but I borrowed money. And so he lets me borrow this credit card for $9,000. I pay for all the furniture on it. The $5,000 went for the first month's rent and the deposit. 2 weeks into this thing, it took 2 weeks to furnish. 2 weeks later of operations, I make $6,000 in revenue. And then the second month, the following month, the first full month of operations, I made $6,000 in profit. And I'm like, holy cow, this is a real thing. Now, mind you, this was before Airbnb was all over, right? It was, people didn't know about it. It wasn't as popular. So fast forward 9 months later, I scaled it. I started talking to other apartment complexes, same pitch. Then I started working more directly with investors that own buildings. Okay. And so I had about 18 at one point, and then 27, something like that. And then COVID hits, and I'm like, oh, crap. I went from like 76K in projected revenue to like $700. And I had like 50 grand in rents I had to pay. So, the whole world's like blowing up on me. Long story short, I ended up closing. I negotiated a bunch of deferments on payments with some of these landlords that I had a really good relationship with. But a lot of them ended up closing down, not at my own fault, but because the owners of the buildings, a bunch of people couldn't pay rent at that time. So they lost the buildings or they sold the buildings. They asked us to leave. And then it came to a point where I had about 6 again. And I'm like, oh, I need to scale this thing. And so I joined a mastermind, a real estate mastermind. And this guy was like, hey, dude, if you're really good at something, why don't you just stick to it? In my head, I'm like, I'm really good at arbitrage. And so right after COVID, dude, thank God I did this because, the benefits were just fantastic. I scaled it to about 76 units at that point. And we were just pumping cash out, dude. I mean, it was just like a cash machine. And funny enough, at that point, I was getting really popular in the short-term rental space and talking to people and networking. I was actually featured on Bigger Pockets too with Tony. And from there, it just kind of took off. People wanted to work with me. And then because of the popularity and just being public about it and teaching people how to do it, I mean, people were just throwing buildings at me. I took over a 30-unit building. I took over a 20-unit building. I mean, it was just significant. And it was great. You know, we were pumping cash out, and then I took that money and I put it into other cash flow and assets. That's when I started buying a few small multifamilies, some long-term rentals, bought my parents a house, which was awesome. And then bought a couple boutique hotels, and then I just learned all aspects of real estate from there, just putting deals together. And then the market took a dump, and of course I had to, and then actually I'm dealing with some really bad regulations in some cities, so we have to close down a bunch of locations right now. But yeah, I mean, I don't know if that kind of gives you the whole story of my life. Yeah.
No, that's amazing. There's a few strategies, and I think like there's a couple different ways and lessons to learn here. Like you're in a market, so the coasts are typically more expensive. They're more appreciation heavy markets, and that can be a good thing. It could be an advantage thing for sure. You hold a property there for a long time, it's going to do pretty well probably. But getting in, that's hard. And so you're in this market where, just being able to buy a place is going to be super expensive. Mm-hmm. It's going to be really difficult. And then it doesn't make sense. Like the numbers don't pencil out. So what do you do? And so I think this is a really good alternative, a really good way of getting into the business, getting into the world without having with the challenges that you were facing. I mean, this is a really creative way of getting there, and I think arbitrage is great. Doing a house hack could maybe have worked if you were living in a place for a while, maybe long enough. Had some roommates that would live there with you, or doing a duplex kind of thing that covered your expenses while you saved up for another one, and then maybe by the time you had enough money for another one, that place would cash flow. So there's different ways, and I think what's important is to kind of think about your portfolio as a whole and kind of where you want to go. So appreciation and cash flow are two different things, and you're not supposed to count on appreciation. But if you're going to be in California, like if there's markets that they're going to appreciate, and it's going to be great, and it's good to have kind of both. So like cash flow can keep the lights on. Cash flow is great and important. You might not be in a market that you can get that easily, and so that's the strategy. You can do it. You can invest in another market. You can go to the Midwest and learn how to invest in other markets. Or take advantage of the local appreciation. You can do the house hack. You can do it slower. You can kind of build up that capital and equity, and then deploy that in a different market or in a different strategy where you can get more of the cash flow. So it's just important to kind of think this way and to think about how, what are the advantages of where you're at? What are the advantages of another market, another sector, and how can you get both of those worlds? I mean, because I think both are very important.
Yeah, I agree with you. And it's also, aside from where the location based, it's also where you're at in your stage in life, right?
Yeah.
A lot of people just want to supplement some income. Cash flow comes in perfect for that. If you're already making good money, you're happy where you're at, your life is great, your job's beautiful, I'd go after appreciation, the long-term play, where it could be your retirement 30 years from now. I always tell people, I'm like, dude, buy a house now, it's going to be worth a couple $100,000 more in 30 years from now. You sell that bad boy, and you got some really good money to retire with. And that's just from one property if you do it correctly. For me, and I was 29 when I started investing in real estate, 30, something like that. I don't even remember, 30, I think. And so I'm like, I had no money to my name. Like I needed cash flow. I'm not a W-2 guy. I think I've had 3 jobs my entire life. I've always been an entrepreneur. So I'm like, and I've always lived off of what I've been able to make. But at that point I was like, okay, I really need to make some money here. And, when my back's against the wall, I work really well. And so when I started doing that stuff, and then I started cash flow, and I mean, for all I want is cash flow. That's for me.
Yeah.
I just want to live that lifestyle. Now that cash flow was able to bring that appreciation, because now I have some really good assets that I know in a couple of years, I'm going to have a nice chunk of change. Right. And now that I've learned a little more, now I'm like, okay, what's that fine balance of I can cash flow, but I also want to be able to be okay in 30 years, right? When I'm not even 30 years, but let's talk about 10, 15 years from now. I want to have that appreciation to where everything's got some really nice equity. If I need to, I can cash out on a fire sale, or enough is paid off to where I'm cash flowing really well at that point. I'm taking the hit now, but down the line, that cash flow is going to be really well because those properties have paid themselves off.
Yeah, and the beauty of a cash out refinance being tax free is another amazing benefit that you can see, and it's just it's harder at the beginning. Like it's hard to get that property to have some expenses that you may have to pay out of pocket if you're in a really appreciation heavy market and cash flow is just super tight. I mean, but if you can stick it out, it can be an amazing thing. I'm sure there are so many more things we could talk about, but I do want to ask you about the golden nugget you have for our listeners.
Being that this is a real estate agent focused podcast, I think what we talked about earlier is probably the best thing that I can suggest. If you're an agent out there trying to break into the space and you're learning everything, I think if you find a niche in terms of not just a market, but a strategy that could work really well. For example, educate yourself on strategies aside from just doing the conventional 30-day close. You put it on the market, you wait for somebody to reach out to you, right? Be proactive, go out and build the relationships. I mean, dude, real estate is all relationship based, including agents, right? And so if you go out and build the relationships, but the biggest thing is be open to learning and be open to different ideas. Now, not only can benefit you, but can benefit your seller or your buyer, right? That's the biggest thing for me. And I think if I were to give any type of golden nugget is learn those strategies that will really benefit, again, yourself and your agent, because man, there's a lot out there that you can really, really learn and apply to the business model where you're not going to be a one-trick pony. You're not just waiting for someone to hit you up on the MLS to say, hey, is this property ready? Because I got a long-term buyer who wants to move into it. No, now you're finding investors. You're being proactive. It might be somebody that can't make it work through a conventional loan, but you can make it work through some sort of creative finance because you know that your seller is a person who's got a ton of equity that they can save on taxes, that if they hold the note, they're making money, they're not paying the taxes, and they're cash flowing every month, and it's secured against their own property. At least that strategy alone right there, right? Now you have a second exit as opposed to having to wait for someone to come to you on the market 60, 90, 120 days later type of deal.
Yeah. No, that's great. I love it. Yeah. It's such a good thing to understand both sides of the coin, really.
Yeah.
I mean, and it's just, you never know when it's going to be helpful. Your own personal deals could be. And that's the other thing is there's definitely opportunities that agents come across. And if they don't understand some of this stuff, they're not going to take advantage of it ever. And again, it's not like you're taking advantage of people. It's knowing that you have a way of making this a win-win for everybody and be able to be the one that's also winning more than just a commission check.
Yeah, dude. And not even that, aside from educating yourself, helping someone out, eventually, I don't know, not everybody wants to be an investor, but a lot of agents, the majority of the agents that I talk to in my network all want to invest at some point. And if you start learning that stuff, dude, it's just another tool in your tool belt that you can apply to your own investments, right? Because now you can go, I mean, you guys have a leg up. You guys get to see all the stuff on market, the stuff that's pocketed, right? All those things. And you can figure out a way to make those strategies work for yourself. I think that's great.
100%. Yeah. I mean, I think it's, if you look at it like from a Robert Kiyosaki cash flow quadrant kind of way, we're all like feeling like we graduated by getting into the self-employed. But if you're really just your own, if you're the only person in your business, like you're just really an employee of your business. And I still, like you, I prefer that. I would rather be like in that world 100%. But, the more you can get into that other quadrant of a business owner, of an investor, the more that you'll have your have people's time and capital working for you without you. And that's where true magic happens. So I love it. How about a favorite book? One do you think that's fundamental that everybody should read, or just one you're currently really enjoying?
I used to listen to a lot of educational and mindset stuff. I'm actually listening to some sci-fi book right now, because every now and then I need a break. But when anybody asks me this question, the one that always comes to mind is The Gap in the Gain, or Principles, right, by Ray Dalio. Who's The Gap in the Gain?
I haven't read it, but I have
That's great.
heard of it. Yeah.
You know, and I'll tell you why I bring it up. Again, I used to listen to a ton of mindset stuff because I'm always trying to grow. But the reason why I like it so much is because we get so consumed in the business about what we're going to do and how fast we can grow and how large we can grow and more money we can acquire. And you kind of, a lot of people, and I don't know if I'm speaking to myself here, but you kind of get lost in enjoying the progress of what you've accomplished.
Yeah.
You know what I mean?
100%.
And so that book, it just puts perspective. It's like, dude, take a breather. How did you do last year? How are you doing this year? Are you doing better? You're crushing, right? Not, you know, everybody's keeping up with the Joneses type of situation where everybody needs the next best thing, next best thing, next best thing. And it kind of humbles you a little bit where you're like, dude, I'm actually doing pretty damn good. And a lot of people don't put that into perspective. That's one of my favorites. And then Principles by Ray Dalio, man, it's principles of life, right? In business. And that's just a great educational book on where you can take your life, right? Your values, all that stuff of exactly what's your non-negotiables. You know what I mean?
Yeah, no, totally. I don't think I finished that book, but I definitely got started. I got really excited about it when it first came out. I have a laundry list of books like that.
Oh man, so do I. Yeah. I have 120 that I have left to read still. I'm like, okay, I'll get to them at some point.
But no, it's good. And I think I was actually just talking about this in another podcast. I think it's good. It's important to realize that, like, you know, like, don't give up on reading just because you just can't really bring yourself to read this dense, not as interesting book. Like, but switch it up. Like, go read something that's fun, something that you really enjoy. You know, get your Harry Potter book out or whatever. And I think like better than anything, you're like building that habit. You're going to that book or going to reading to be the source of your boredom or like, you know, your downtime, as opposed to just scrolling on TikTok or whatever. And you know, we can all agree that that's better for you, your attention, the habit building, etc. So yeah, I love it.
I read a really good quote by Naval Ravikant years ago.
I love him.
Yeah, I mean, he's awesome. I listen to all his stuff all the time. And you know, he's what's the word?
Angel investor.
Yeah, he's an angel investor, but no, I'm looking for his type of like he's a lot of gosh darn it, what, you know, when you're trying to do like thinking of bigger things. I forgot, there's a word for it anyway, whatever. Anyway, he said this quote, and it's a lot of theory, I guess, is what I'm trying to get at. But anyway, he said this quote is, read everything and anything until you love to read. Right.
Yeah.
And it's just, you just read until you love to read. And it's the same thing, right? Even with audiobooks, if there's something, dude, I'll listen to an audiobook where I get through chapter 4 and I used to beat myself up and I'm like, I got to finish this. Dude, if you don't enjoy it, move on to the next one.
Yeah.
Right. Dude, I've read comics, I've read manga, I've read fantasy, I've read educational. And when I get to a point where it's like, I just stop enjoying it, I just stop. Don't beat yourself up. Like, just read it, enjoy it up to the point where you don't, and move on to the next one if it's not for you. It's that simple. You know, and eventually you're going to find something that's just going to go through all the way.
That's very Naval. I think I heard on a podcast or an interview recently them talking about him just not doing anything he doesn't want to do. Like,
I heard that one too. Yeah, that's funny. Yeah,
I love it. Yeah, he's great. If you guys haven't listened to him, he's an amazing thinker, and it's just very. I don't know what the word is. It's an enlightening to listen to him because he just thinks about things so. And he communicates all this deep thoughts so clearly. So he's great.
Philosophy, I guess, is philosophy and his theory is the right thing that I'm trying to find. I don't know, whatever.
Yeah, he's great. So finally, if anybody wants to, follow you or your journey, are you on social media? Where can they find you?
Yeah, so I'm all over the place, man. I got a YouTube channel. I don't post very often on YouTube. I just post deals or because I want to teach on there exactly how I acquired it, the nuances of the deal. Again, I love putting deals together. So YouTube, Rafael Loza. Facebook, Rafael Loza. I just recently started posting a lot of stuff on Facebook just, again, to teach people or to guide them in the right direction. And then Instagram is where I was really heavily posting. Instagram is it's Rafael Loza, so ITS Rafael Loza. But any of those platforms, man, anybody can reach out, send me a message. I always respond. And I'm always open to conversations. I'm always open to structuring deals. I'm always open to teaching people how to structure deals, whatever the case may be.
Yeah, I love it. Well, Rafa, thank you so much for being on the show. It's been a lot of fun and a great conversation. We'll have to do another one because I'm sure we had at least 2 hours more to talk.
Yeah, we could talk about this forever, man. I appreciate you having me on.
Thanks for listening to the REI Agent.
If you enjoyed this episode, hit subscribe to catch new shows every week.
Visit reiagent.com for more content.
Until next time, keep building the life you want.
All content in the show is not investment advice or mental health therapy. It is intended for entertainment purposes only.